Hello my fellow freedom builders and welcome back to the channel. Today's video is about a topic that will get more and more talked about in the upcoming month, and I thought why not take it up right now, because there is just about 4 months to the next presidential election. And as you all know, unless you have been living under a rock, the fight here stands between the sitting president Donald Trump and the candidate to beat him, which is Joe Biden, that also used to be the vice president. And what we want to see here is if it really matters whom of these wins. Doesn't matter if Trump wins. What about Biden? Who's best for the environment, for companies? Let's take a look at if it really means anything for the stock market. We are here to build a good, solid financial future. So of course we want the president that gives us the most money in our pocket, the most increase in stock prices. So let's see if the statistics from the last 100 years or so can tell us anything about who you should vote for. And I say you should vote for because I live in Denmark, so of course I simply cannot vote, and I know who I would vote for, but make sure to notice that this video is not about politics. So all of you that want to comment in the comment section, that is great, but this is not a political debate. This is a look at the statistics. So if any of you are trying to fill the comment section with all sorts of political nonsense, this is not the video, this is not the comment section. So please let it be investor focused. All right. Now, when we look at this, first of all, what I want to look at is where we are in the presidential election cycle, because there is some statistical fact that we need to look at here so that we know if there are years that are better to invest in than others. We'll also have a look at the split between Democrats and Republicans, and we'll have a look at who are best for the stock market, who are best for the overall economic numbers. Alright, so let's get to it. Before I go on to show you when or who you should vote for here, you should just vote for the subscribe button underneath the video. But let's get to it here. Here we have the presidential election cycle. And of course, these numbers can vary a bit depending on what time periods you're looking at. Are you going back to the middle of 1850, 1860? Are you starting from the 1920s? Are you looking at numbers after Second World War? And already here we're coming to there are a bit of problem when we look at these statistics, because of course it is nice to look at the statistics, but the problem is that there's only an election every 4th year. And of course you could compare the election numbers now to those 4 or 8 or 12 years ago, but can you really compare them to numbers from Second World War or 1920s? That is 100 years ago. That we are living in a completely different society with different structure, different political structures. The two parties, the Democrat and Republicans, are completely different from the parties we saw 100 years ago, but let's try and have a look at it. As you can see here, we have year 1, 2, 3, and 4 after the election of a new president, meaning that this would be, in Trump's case, 2017. That was the year where he entered the White House. Then we have 2018, 2019, and now 2020, where there is an election campaign running right now and he wants to be re-elected. So what we can see here is that the first year, just after a president is elected, the stock market goes up on average 5.13%. The next year is a bit lower. Then we have the third year that gives us on average 13.5%, and the fourth year gives us around 7%. So if we should just look at the numbers here, we should of course go extra deep in the stock market here every third year of a presidential election. As I said, this was actually 2019. I'm not even sure that 2019 are included in these stats, but this is 2019, and all of you know that that was a good year. The market went up 25% or something, whereas 2018 was a terrible year. Started out well, but the Q4 was terrible, so we ended up, the overall market ended in the negative territory. So actually we can see some, this fits the statistics quite well. But again, we don't have that many samples to look at because, again, there's only so many presidential election cycles. And when we're looking at stats, we want hundreds and thousands of data numbers, data samples put into our investigation here, our research. But we don't have that here. Every 100 years, we only have around 25 of these sample sets to put in. And that is a bit small, if you ask me. If you look at the stats, we can divide this even more up. As you can see here, we have the year 1, 2, 3, and 4, and we have the 4 cycles here. The 4 quarters here, and with the average. I'm not sure how much we can use this for, to be honest, but that is at least what we can look at here. Just be aware of that the first one here is not the normal Q1. This is actually the quarter that begins with October 1st, meaning this is actually the Q4 normally. So this would be our normally Q1, Q3, and Q4. And that is simply because that is where the fiscal year begins on October 1st. So you can look at this, and this is the average Dow return since 1896 by quarter of presidential election year cycle. But I'm not sure how comfortable you would be putting your money into the market from some data set back from 1896. I would personally not put my money into it like I'm not putting my money into the market from the theory of sell in May and walk away and so on. That is, again, some funny stats to look at. But it is something that you should be careful investing after. Sometimes when people dig these stats out of the history, they might actually be okay. But all of a sudden, when they write an article about it and it gets known all over the investment world, then people start to try to use this advantage, this edge, and then it disappears. So this is actually not something I would invest after, not at all. Then we have an interesting discussion, because I can see now already in many Facebook groups and other forums where I participate with investment debates and discussions that people have started debating who would be best for the stock market. Would it be Trump or would it be Biden? Now, the discussion goes something like this. One guy says, I think Trump will be best because he will give some tax deductions for the companies. Then they will have more money to invest and they can hire more workers and we are all getting more wealthy. And then a Biden fan says, no. He's giving all of these tax benefits to all the wrong people. Give the money to the poor people. They will spend some more in the shops. And the shops will get richer and they will order more from the factories and so on. And you can imagine the debate. You have pretty much for certain participated in one as well. So what I'm going to show you here is not a pro or contra either Trump or Biden. As I said, I have my clear favorite who I want to win, but that's not really important here. What we can look at is that when we are looking for the changes in the stock market since 1950, we can see that you have the green here, which is the S&P 500 all president. So this is the median percentage gain, no matter who is president all over history. But if we are looking at the Democratic president, then there is a tendency that the stock market goes up more when we have a Democratic president, and you can see the Republican president, that is actually way worse than the overall market. Well, you can debate, is that really something we can use? Again, it is not something I would invest after, but I think it is funny to throw this chart into the debate sometimes, because I do see in the investment world that there is this hardcore belief that the best party for the stock market and for the companies is definitely the Republicans. And well, if we only lean on this statistic since 1950, it's actually not. It is actually the Democratic presidents that have been way best for the overall stock market. Now, let me say right away, before you lynch me or write some really nasty stuff in my comment section, that I think pretty much that it doesn't matter who's president to the stock market. Of course, there can be some short-term fluctuations. For instance, when Trump was elected, the stock market went up. And the reason why the stock market went up, or at least one of the reasons, was that he gave a lot of tax benefits right into the pockets of the companies. And since the stock market is a picture of how much the companies are worth, well, then the investor thought there must end up some more money on the bottom line for us. So of course the stock market went up. Well, a lot of the money that was given in these tax benefits were used or were spent on stock buyback programs, which was also a very important thing that has helped the stock market over the last 3 years to go up quite a lot. Now, here during the crisis, we can see that a lot of companies have cut back on the share buyback programs, on the dividend payments, and so on, and that will definitely put a strain on the stock market, absolutely. But to be honest, I don't think that you could say that one party or the other, or one candidate or the other, will be better for the stock market. And that is why, and I have to mention this, and again, it is not to start a big political debate, but I have found it extremely funny that Donald Trump from day one has said that he saw the stock market as a primary thermometer or barometer measurement for his success. Because that is a good thing when the market is going up and you can kind of say, hey, I'm a genius, just look at the stock market. But what I have kept telling people is, if he's a genius when the stock market go up, then you have to acknowledge that all of a sudden when the stock market goes down, he all of a sudden becomes an idiot. And of course, that is not how the world goes. So trying to pin as a president's success or the quality of him as a president on the stock market, that is absolutely ridiculous, if you ask me. It simply doesn't go that way. If you stick to that explanation, he might have a hard time to explain if the stock market does worse with him or than it did under Obama, because then that would show that Obama was a better president. And I'm not sure Trump really buys that narrative, but that's a completely other story. Again, let's have a look here at the different presidents over time. And this is a start going back to the end of 2016, so we don't have Donald Trump included here. But we have back to Herbert Hoover, term start date 1929 here. And again, let me just say here, what we have here, I think I counted 22 presidential periods here of 4 years each. And that is 22 data points in this sample. Is simply not enough to, we need hundreds or maybe thousands of samples before we can actually say something intelligently about this. And you can also see here that Herbert Hoover, he was the sitting president. You can see here total return during 4 year terms. Well, he was sitting in the middle of the crisis in the 20th and 30th year. So of course he will have a terrible statistics here. And then after him came Franklin D. Roosevelt, and he took 205% up. then 40% down, and then 28% up. But he was starting from a very low point because Herbert Hoover was the president here. So Roosevelt was taking over a stock market that was pretty much beaten totally in pieces. So of course it is easier to make 200% up when the former president took almost 80% down. And I don't think that Herbert Hoover was to blame for the 80% down, because this was a world crisis and you could not really pin that on one president. So, and then you can see here we have some Democrats, Truman. Of course, the presidents coming in right after the Second World War, they had a huge advantage because everything was speeding up. We could see in here in Europe, we got the Marshall help from United States, which we are very grateful for still this day. That helped speed the entire Europe up, and we were buying a lot of stuff from United States. So I hope you can see that this is much more a question of larger financial cycles in the overall world economy than it is a question of if it is Bush or Obama or Clinton that is the sitting president. Of course, the sitting president can have some sort of impact, but the overall question as to if Clinton was making 100% in the first 4 years, and Trump, I think up until now, he has made something like, 30% or something like that. Maybe 40, I don't really care actually. That is not a question of who is president, if you ask me, and all the research I have done for this. This is much more a question about the larger financial cycles in the world. All right. I have a few other numbers here. This is since the World War. Again, on the Democrats, up 4.4%. On the Republicans, only up 2.5%. But as I said before, I'm not certain that we can say too much about this. What we could say something about is, of course, what the presidents have been able to accomplish in the financial numbers. And here we can actually see that it seems like that the Democrats are better for the overall economy. And again, before you slaughter me, this is not me saying this. This is stats that I have taken from, and I've tried to find websites that are politically neutral, meaning that I have not picked numbers from some GOP Republican supported website, or I've not picked something from support Democrat websites, or the Biden election website. I've tried to find websites that are focused on stats, that are based on universities that are well known for their thorough research. So please don't kill me in the comment section, and there can be a lot of explanations for these numbers as well. I'm pretty sure, I haven't written it here, but I'm pretty sure these numbers are from Second World War up until 2014, so we don't have the latest 6 years here. But what you can see is that we have a growth in GDP. There is definitely a winner here. That is the Democratic Party. We have average jobs gains. We have gain in median income. We have how the unemployment has gone. We had debt to GDP, which of course we want to go down because we want as small as a number of or size of debt divided by GDP that is possible. And we can see here that overall the Democrats has been able to lower that, and the Republicans have been raising that. Now, if we are looking at the last couple of presidents, Trump and Obama, then of course we could say that Obama raised it because the GDP was dropping due to the financial crisis, and he was taking on a lot of debt to stimulate the economy. You could say, and many economists are saying this, that the financial cycle kind of was on the last of its fuel when Trump took over, and then he started to take on some more debt, and he gave some tax benefits, tax cuts, and so on. And that has been criticized quite a lot among economists, because that was actually maybe the time where you should try to build a bit of a more stable foundation so you could get ready for the next downturn in the economic cycle, because that will come, and that doesn't matter who is sitting as a president. And again, here we can see the stocks here, year on year here, the Democrats have been better for the stock market. Again, if we look at this in 25 years, on 50 years, on 100 years, it can easily be that the picture will be completely different. Again, because we only have quite a few data samples. Now if this is from the Second World War up until now, you can see here from the Second World War, that is around here. We only have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. We have 18 data points in this sample, and that is simply not enough. If you were a healthcare company, some pharmaceutical company, and you were trying to get a new drug approved with the FDA, and you came and said, well, we have these 18 patients and they all got better, so we want this approved, they would laugh at you right away, because they're saying you need hundreds or thousands of data points before we can say anything with any statistical validity. So 20 or 18 or 22 data points is way too little to put your faith in these numbers. What you can do, however, and that will be the end of this video, is you could look at if there are certain sectors that will benefit from one president or the other. And of course, you would have to listen to their political program. I haven't heard too much from Trump yet. I have tried to listen to some of the debates, and of course the entire virus crisis right now has made it very difficult, because Trump has not been able to hold many of his rallies, and we've pretty much not heard from him. So it is hard to say if they have any fixation points that they want to go after. But I think we can say with pretty high certainty that if Trump is re-elected, then we might see a bit more of a surge in the oil industry, maybe coal as well, some production sectors. Trump has said, or at least he said in his last campaign before 2016, that he would hit hard down on the healthcare, the pharmaceuticals. They should not be allowed to charge so much for their drugs. That hasn't really happened much there as far as I can tell, but that is just an example. He also said that he wanted to give a lot less help to the green energy, to the entire wind industry, solar panels, and so on. So you might take the president or the candidate Biden and say, okay, are there certain sectors that could help or be hammered down if each one of them wins? But that is a topic for an entirely other video. This video was much more about if it really matters who wins the election. My guess, my opinion here is no, it doesn't. And you're welcome to disagree with me. I've been researching quite a lot for this video, and as far as I can tell, there are of course researchers and scientists saying yes, it is a clear that there's a clear advantage if this party wins or that party wins, but the overall majority of researchers in this field are pretty certain that it is not something you can base a reliable investment strategy on. So my suggestion to you is that you keep with your current strategy. Of course, we are all interested in the election, especially because that United States are so extremely important for the rest of the world. So every time Trump he tweets, we can feel it in the stock market in Denmark. And I saw at one point Trump was with one tweet, he sent the oil price down 6 or 8%. So billions or trillions are lost or gained from a few tweets. So of course we are interested in who becomes president, but we should not make a foundation in our investment strategy as to guessing on if one wins or one doesn't win. I saw that a lot of people were guessing before Trump got elected that if he got elected, it would send the market down, and the exact opposite happened. The same happened in 2008 when Obama was elected. I saw the entire Republican Party, Fox News, all of these guys out on the other wing here said now the stock market will simply go down into a big black hole. And what we actually saw was that the first 4 years the stock market went up 90%, the next 4 years almost 51%, so that didn't hold true either. So forget about the election, at least when it comes to your investment strategy. Stick to your own strategies, that normally works. That will probably also work no matter who gets elected in November. That's all for now. I hope that this was a bit educational for you, and I got the chance to bring out my inner history teacher here. All right, take care of yourself and your money out there. I will be back soon with new informational and educational videos for you. Bye for now.